Business experts and stakeholders have expressed optimism that the year 2025 will be better for the country in terms of economic growth and outlook. The stakeholders at the breakfast meeting put together by the Franco-Nigeria Chamber of Commerce and Industry (FNCCI) said this in collaboration with private sector players. Said the indices shows a positive outlook for the economy this year, with things expected to materialize within the year. Speaking on the proposed tax reform bill, Director Chief Executive Officer of the Center for the Promotion of Private Enterprise, Dr. Moody Yusuf, said the bill will ease a lot of burdens on businesses and citizens and eliminate multiple taxation. Chairman Presidential Tax Committee and Fiscal Reforms, Mr. Taiwo Yedele, assured that the fiscal balance indicators are moving in the right directions and expects them to reduce in 2025. He appeals to Nigerians to rely on credible data before making positions.
2025 is the year that we begin to see the tangible outcomes of those reforms and then the sacrifices that the Nigerian people are making. But it's also important for us that as we develop those expectations, we need to be realistic with them and they need to be data-driven. We don't have to always follow general narrative, inflation will continue to go up. If you say that, you create an inflation expectation that can give permission to people to raise prices. So that's not good for us. But if you look at the data suggests that inflation in 2025 will be much lower than it was in 2024. So essentially, I think it's positive outlook.
We expect a much better outlook for our foreign exchange environment, a much better outlook for our energy situation, a much better outlook for our fiscal situation. And these are very key economic fundamentals that we need to drive growth and create jobs, going forward. So there's a reason to be optimistic. The reforms, no doubt, has been quite challenging for many of us, especially from the point of view of the shocks from the foreign exchange depreciation and the high energy costs. But on the whole, I think the view around the table is that the outlook for 2025 will be much better than what we had in 2024.
Well, let's take you outside our shores. Asian shares market rose in thin trading today as much of the region was on holiday for the Lunar New Year, while the US dollar held its ground after the Federal Reserve signaled a pause in policy easing. The strong yen weighed on Japanese shares, although the Nikkei managed to close with small gains. Australian stocks benchmark edged to a record high. US stock indexes ended slightly lower, and tech was the biggest drag on the S&P 500 as the bench and the U.S. Central Bank held interest rates steady, and the Federal Reserve's Jerome Powell said there would be no rush to cut them again until inflation and jobs data made it appropriate. Powell's comments put federal policy in a hold pattern at the time when the U.S. economic landscape seems both stable and uncertain, with a healthy set of macroeconomic fundamentals that have changed little in recent months. Coming decisions from President Donald Trump's administration on immigration, tariffs, taxes, and other areas could prove disruptive.
At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%. We know that reducing policy restraint too fast or too much could hinder progress on inflation. At the same time, reducing policy restraint too slowly or too little could unduly weaken economic activity and employment. In considering the extent and timing of additional adjustments to the target range for the federal funds rate, the committee will assess incoming data, the evolving outlook, and the balance of risks. We're not on any preset course. As the economy evolves, we will adjust our policy stance in a manner that best promotes our maximum employment and price stability goals. If the economy remains strong and inflation does not continue to move sustainably toward 2%, we can maintain policy restraint for longer.
Well, crude oil prices were little changed today as markets brace for threatened tariffs by U.S. President Donald Trump on Mexico and Canada, the two biggest suppliers of crude oil to the United States, and awaited the meeting of OPEC Plus producers. U.S. West Texas Intermediate crude fell to sell for $72.24, with a downward review of 0.52%. Brent crude futures also experienced a downward price margin, 0.54%, to sell for $76.17 per barrel. Bonny Light sells for $78.62 per barrel, with a decline of 2.84%. And for the OPEC basket, crude oil dealers offer $79.56, with a price decline of 1.11%.